Today's webinar features Nicola Mining. Nicola is a copper explorer advancing its fully permitted New Craigmont copper project located near Merritt, British Columbia. Nicola is gearing up to commence a copper exploration program at the project in 2025. The company also recently started receiving gold and silver ore from a third party, and production at its New Craigmont mill is expected to ramp up and reach full capacity in the third quarter. The company also owns 100% of the Treasure Mountain silver property, which includes 30 mineral claims, a mineral lease, and spanning an area exceeding 2,200 hectares. Today, I have with me on the webinar Peter Aspig, who's the President and Chief Executive Officer at Nicola Mining. The format of today's webinar will be comprised of two parts. In the first, Peter will provide an update on Nicola, and then in the second part, we'll take your questions live in a Q&A session. You can submit your questions at any point throughout the presentation using the chat. To start, we'll handle the disclosures and then get into the presentation. For Nicola Mining, there may be some forward-looking statements made on this call. We would direct listeners to the cautionary note on page 2 of the Nicola corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Nicola Mining specific disclosures. So with that out of the way, I'll turn it over to Pierre, who will discuss Nicola and what you have to look forward to with this company.
Hi, first of all, thanks for having us on. I just noticed that for the first time that I've ever used this back screen that we made, that it's actually backwards. So apologies for that. But we're at a very exciting time with the company right now. I'm just going to go through this presentation very quickly. I believe that several of the participants know about the company and know where we're going. So I'll keep this as informal and up to date as possible. So with that, I just, we are unique in that we'll get into detail, but we're unique in that, we're doing exploration on a fully permitted, on our copper project, which is the highest grade copper project in North American, a major copper mine in North America history. We actually just started exploration today. So there'll be news coming out on that. We own the high grade Treasure Mountain copper mine. We are getting ready to start our bulk sample at the Dominion project, and we are in the process of wrapping up our milling operations. So, in short, how would you describe the company? We provide investors all the upside. Our exploration is occurring on a permitted mine site. So if you were to look at NPV analysis, if we were to have a discovery and go into mining, you certainly expedite the value of that SPV. Mm-hmm. And the other thing is, we're backed or we're rooted in cash flow. So I'll get into much greater detail. So we started receiving the material from Talisker last month. We will go into operations this month and we'll continue to ramp up. And that's production of gold and silver. And everything we have that I would like to highlight is fully permitted. So our assets now, diversified core assets doesn't really mean a lot if they're not synergistic. So one of the key strategies or credos of the company is to have all the assets synergistic. So if you look at the Craigmont Copper Project, so the Craigmont Copper Project, and bear in mind that we're located adjacent to Highland Valley, and we're 1/3 of their property size. It's largely unexplored. We've got a very robust program that will be going on this summer. That the drilling actually started today. Stay tuned for news on that. The Merritt Mill is a very unique state-of-the-art milling facility located in Merritt, just outside of Merritt, British Columbia. Again, it's fully permitted. I'll talk more about the permits. Treasure Mountain Silver Mine. Now, if you look back in 2012, In 2012, the company had a market cap of 230 million, only based on holding and owning the Treasure Mountain silver mine and the Merritt Mill. Now, the silver mine's kind of a forgotten asset. We will be doing exploration on Treasure Mountain this summer. We just waited until silver prices were above $25. We feel very confident that that's where the price will stay, and there's a lot of upside to silver now. So we will be going up to the site starting July, looking at our exploration program, putting that all together, and even look at reopening the mine. The sand gravel pit rock quarry, we also have a cement ready mix plant. These are just peripheral businesses because in this industry, cash is king. And, right now we're in this great bull run and precious metal run. So a lot of companies have the ability to raise capital. We are on the, taking the other stance that the less capital you have to raise, the better it is, because we wanted to position the company so that we didn't have to raise money. And, that we really benefited from having a rock pit, gravel quarry, and also a cement ready mix plant. And the Minion Gold Project, we commence our operations on site on July 1st of this year, and we will start shipping to high grade gold material to the Nicola mine in the Craigmont mine in Merritt, starting August. So, this is a picture or map tells a big story. So you can see the two main tranches in British Columbia, the Cornell tranche and the Spence's Bridge tranche. The Spence's Bridge goes east-west like this, and then the Cornell tranche goes up and down. And you can see that we are actually where the two tranches meet. And so there's a lot of mineral potential on as far as the copper. Jurisdictionally, we're right on a highway, so we've got, infrastructure. We've got water. We have one of the largest water permits in British Columbia. We don't use fossil fuels to run our operations. Everything we're on the power grid. We actually pay 5.5 cents per kilowatt, which is a very, very low price to run an operation. So getting to the Merritt Mill, and, there's people talk about the value of permits, but I would even go beyond that with our Merritt Mill, in that it's the wording of the permitting that we have that is very significant. So our permit reads, Nicola Mining has the right to accept and process gold and silver mill feed from anywhere in the province of British Columbia, subject to notifying the Ministry of Mining 10 days ahead. There's no consultation. There's no additional studies that need to be required. All we need to do is notify, and we can start producing. And that's one of the reasons why this makes our site so attractive. And I love this diagram here. So here you can see where we are, where the mill is, and with the diamond. And if you look at those white dots, each one of those white dots represents a project that has greater than 50,000 ounces gold, higher than 7 grams, none of which have a permit. We're the only permit in that region that is fully permitted to do the material. So I kind of look at it in two, historically we looked at it like, okay, we're an airport, and those are projects that they're like airplanes, and they can come to our site and we can work together. But now, as we're starting to ramp up our cash flow, we also are looking increasingly at acquisition opportunities, because we have the ability to use the strength of our balance sheet. And I highlight one example is, if you look at Blue Lagoon, who we have a milling partnership with, we are one of the largest shareholders of Blue Lagoon, and we help them throughout the permitting process. We own 7% to 9% of the company, depending on the share dilution, and so we've been there to help them. We've also benefited that the fact that their share price has gone up, and so we benefit from every from both an operational and an investment perspective. So here you can see the mill. It's a great facility. If you look at the lower left photo, one of the key takeaways here is that you can see how big it is, given that the capacity is 200 tons a day. And that's something that we are looking at doing going forward, is now that we've got Talisker and we have Blue Lagoon coming on and Dominion coming into production, our next step is to move towards mill throughput expansion. But if you were to think of, okay, and let's put an asterisk here because you can't take these projections as guaranteed. But historically, if you looked at 2023, we did $11 million in revenues, $7.5 million operating profit. Last year, we did less than that, $5 million in revenues and $1.5 million OP. But the reason why the large decline is we could really see the throughput of what was happening in 2025. And, with our partner with Talisker, we could see where they were a lot in their process with Blue Lagoon as well, because we were very instrumental throughout the process of them getting their final mill permit. And with Dominion, which we received the final bulk sample permit in January 2025, we could see all of these coming on stream. And so we shut the mill down. We only milled 2 months last year, put the mill into upgrade phase. So we installed one of the largest gravity concentrators in British Columbia. We fully automated the mill where we can basically run the mill from a tablet. And the significance of that is it doesn't just provide like streamlining with employees and cutting down the number of employees, which we're able to do. What it does is it actually maximizes the chemical balance, because ultimately we want to maximize our recovery ratio. So, and then we did a lot of infrastructure work, including swapping motors to increase our throughput production. And we will be applying for that mill upgrade, or not mill upgrade, but the expansion to our milling throughput. That's in the process right now. And that is being submitted with First Nations. So we're very confident in our ability to get that permitting. But if, our expectation from June of 2025 to June of 2026 is to have revenues of, somewhere between $70 to $100 million. So we're in a very good position, because not many junior miners have revenues at all. Here's the new Craigmont project. Again, we started exploration at the Craigmont today, the drilling exploration, and we're very excited with what we're going to be targeting this year. Here you can see there's Highland Valley. We're located adjacent to them. We're about 1/3 of their land package size. And you can see that we're right on the highway. So you can literally rollerblade to our site if you wanted to. Not that I recommend it. But, and the program that we're going to be targeting this year will be on the Marb and the Kaz zone. Now, this is a very important slide. Yes, it has the historic side, but if you look at the bottom right, remember that this is the highest grade copper mine in the history of British Columbia. And if you read, on November 19th, 2015, Nicola acquired 100% of the outstanding shares. So it was not. So the mine operated from 61 to 82. From 1961 up until 2015 November, so after that, there was no copper exploration drilling on the site. From 61 to 82, all drilling focused on the ore body and the mining activity. And so we've got this incredible brownfield project that is a permitted mine site. And after that, the former senior geologist, principal geologist of Teck Resources, approached us and said, "Do you guys realize what an incredible project you have?" And Dr. Paul Johnson has been on our board since then and has been very, very instrumental in helping us in doing a lot of initiatives on exploration. But here you can see, here's New Afton, Craigmont, where we are, and you can see how the mineralization is similar, and that's what we're going to be targeting this summer. So again, historic exploration focused on the skarn. And this photo you see here is actually from the very first drill hole that we ever drilled, where we drilled 85 meters of 1.1% copper. This year we will be focusing on the porphyry discovery, and we'll continue to update investors on that over the summer. Here you can see, and this is also very significant. This was a hole that we drilled on the top. I assume you can see my cursor, but this is clearly skarn. We also had holes where we had porphyry. So we've already found porphyry. We have yet to discover a main porphyry body, but I would also like to highlight the fact that, there could be multiple porphyries. If we look at Highland Valley, which has 9 very large porphyry systems, we could be sitting on a project that also has more than one porphyry system. Here are some of the highlights that we had. And you can see 85 meters. This is the hole that I mentioned, 85 meters, 1.1%. And then what you'll see is in 2019, we had 101 meters of 1.33%. And then last year we had, and then there was a gap because during that period we focused on, geotechnical type of survey. So rather than just drilling, we wanted to really feel comfortable on the geotechnical side. So we did IP, electromag mapping, Z-TEM survey, and worked with Nitetsu from Japan. We will be working with a Japanese group this summer as well. And we continue to map out, understand the property better. Last year, the drilling that we did were focused on shallow holes. And this year we will be drilling like deeper now. Treasure Mountain. Again, this is almost like, this is as a standalone company. We closed the mine. We put the mine into care and maintenance in 2013 for the reason that in 2013, silver was $14.68 an ounce. The Canadian dollar was $1.05 to the US, and we were making $1.05 profit. So it didn't make sense to deplete the resource at $14 silver. So we mothballed it. Everything is in good order. Here you can see a recent photo of the site. And this is something that we can reopen, also do exploration, and ship material to our mill. Now, in 2012, at that time, Coeur d'Alene invested $5 million into the company at a $200 million valuation. And the genesis of their investment thesis was on the backside of the mountain. It wasn't the mill, it wasn't the mine here, where here you can see level 1 stope 2 that we could extract. There's 14,300 ounces still in situ that is available. But what Coeur really liked was actually the backside of the mountain, which here you can see the north side. It's this area here and this area here, especially here. So this is where we did a lot of soil sampling, grab sampling. And all I can say is when I spoke with the Coeur people, they just said something's there. They don't know what it is, but it appears to be unrelated to the historic silver mine. So it would be a different event, and which kind of makes sense, because if you look at this, you can see the higher grade is not, it's not contiguous to where the mine is. But the grab sample and across the vein at top. So this is an example of where the vein is exposed, and the vein is exposed for about 1 kilometer. But you can see, 1,300 grams silver, 2.6 grams gold, copper, and that. And the historic mine didn't have any gold, nor did it have any copper. So this is something we're going to be focusing on later this year for exploration as well. And once we understand what's there, then we'll review what our next strategies are. Dominion is a perfect example of some of the projects, those white dots that I talked about earlier. And Dominion is a project where at surface, the average grade, so in our sampling across the vein, the average grade is is approximately 1 ounce gold per ton. The issue they had is that there's only 15, 20,000 tons. So it didn't justify building a mine. It didn't justify, they can't afford to build a mill. So we invested, we own 50% of the project and a 75% economic interest. And we will be producing this summer. So this will be the first year we'll be producing. We received a 10,000 ton bulk sample permit in January of 2025, and we're already in the process of mobilizing for July 1st. So on a corporate level, again, cash flow, diversified assets, but again, synergistic assets. We've got a management team that is execution focused. You could almost be critical that we haven't done enough marketing, but that's just the way we are. We there's a Japanese saying, the wise eagle hides its claws. And we really haven't talked about what we have up until now, because now we're talking about this is what we're doing, and everything we're doing is going on right now. And the mill, state-of-the-art mill, it's going to be operating for the next 8 to 10 years. We're very excited about this, and it's going to be a big cash flow generator. New Craigmont project, again, fully permitted mine site, porphyry copper targets that we will be exploring this summer. Drilling started today. And Treasure Mountain Silver Mine, which we will also be doing exploration on this summer. And kind of repetitive, but strong operationally, strong explorationally. So with that, I'll talk and the board. So myself, Peter Espig, come from investment banking background. I was an executive at Goldman Sachs. Private equity was one of the pioneers of SPACs. But interestingly, when I was young, so I started working as a diamond driller when I was 16 years old, all the way through university. So I spent 7 years on the rig. So I know what it's like to pick up a pipe wrench. I can run skidders. I love heavy duty machinery. I know what it's like to get diesel and oil under your fingernails. And I spend a quarter of my time at site. Will Whitty is our VP of exploration. We will be coming out with another a news release on a new geologist we just hired this month. We're very excited to have him on, and he's a copper specialist. And Sam, Bill, and then our board as well is very solid. We've got Frank Heugel, who's a well-known German investor, Paul Johnson, who former senior geologist at Teck Resources, Malcolm Swallow, who's a globally renowned mine turnaround specialist, and Brent Almond, who is the CEO of Ocean Partners, who we have a very, very close relationship as both an investor, as working cooperatively, and also as for offtake agreements. And that's all. Thank you.
Great. Thank you very much, Peter. Great presentation. So with that, we'll now turn to the Q&A portion of the webinar. Just a reminder to everybody on the line, you can type your questions in at any point into the chat box, and we'll get to them. So maybe to start off here, it does look like there might be somebody new to the story here. If you could just kind of explain how the setup is at the mill, and that you'll be using third-party mill feed as opposed to your own production.
Well, so two parts here. So one is Dominion is our own production, but we have milling partnerships. So we enter into agreements where the miner pays for the mining, and we pay for the milling, and then we have a profit share embedded in that. And so, look, the reality is that some of these mines take a decade. You look at Talisker. I mean, Talisker has 20 years to get to where they are now, and Blue Lagoon as well. Blue Lagoon, they've got $50 million of infrastructure. So I think the mutual benefit here is that we have a mill, they've got a mine project, they know their mine project very well, we know our mill very well, And rather than going out and trying to do everything on your own, which is very, very capital intense and dilutive, both sides can benefit from these agreements. But we will continue to look at acquisition. Like I said, we are one of the largest shareholders of Blue Lagoon, and we are the largest shareholder of Dominion. So we will continue to use our balance sheet and our P&L to go out and do acquisitions. But ultimately, if the deal works and our partner makes money and we make a lot of money and they make a lot of money, it makes sense to enter into these agreements as well. It's good for the province. It's great to see small, high-grade projects go into production, and we're happy to partner with them. Now, as far as I see the one question now, the copper itself, remember, we're not mining copper right now. We're doing copper exploration. A copper mill would be much larger than the mill that we have. But the point being is that we have a permitted copper mine site, and so it's more a proof of concept. We don't have to go through years and years of, impact benefit agreements, environmental impact studies, things that we're able to put together a mine plan. Now, obviously a mine plan would need approval, but the point being is that with the copper discovery, which we believe we're going to have, everything gets expedited.
Perfect. And then maybe just touch on the condition of the mill right now. Obviously, it's up and ramping up, but just ramping up. What's the state of it?
Pardon me, what was that?
Maybe just talk about the condition of the mill.
The mill is in perfect. Like the mill is ready. I mean, the mill was ready last year. Was ready the year before. It's just during the period like so the mill starts June 15th, but we could have, there was no need to do all these upgrades. It's just you want to do upgrades when the mill is not at full capacity. Because we see the mill going to full capacity, might as well get all the upgrades done so that you're not shutting down. And, I give an example that something that drives me crazy. If you live in Vancouver, they're always tearing up roads to do upgrades. And, had they installed the right piping or, had the right size from the very beginning, they wouldn't have to do these upgrades. So basically what we've done is, or, even Trans Mountain expanded the pipeline, but had the pipeline been much larger from the beginning, they wouldn't have had to do the expansion. So basically what we've done is rather than shutting it down, upgrades that maximize recovery, upgrades that maximize like synergy or like streamlining our entire process. Those were all done when we had time prior to going into production. But the mill is ready to produce and has been ready to produce for a long time. And it's a new mill.
Perfect. Okay. Do you have a goal for production this year?
So I break it down differently. I break it down that the from June, right? So from June of this year to June of next year. So we are looking at doing somewhere between 14 to 20,000 ounces. But the goal, the main thing is to get close to the 100 million revenues.
Right. Okay. Another question here, just trying to the corporate side. Do you have institutional investors?
Our largest investor is BMO. And so BMO is the largest investor in Nicola. Our second largest institutional investor is Concept Capital Management, which is a German fund. We have several other funds that have stakes in the company, and also management is a large shareholder. So if you were to look at the company, I would say that 65 to almost 70%, but let's say 65% of the shares are tightly held.
All right. Okay. Let's see here. So we have a couple questions here, just wondering about current cash balance, how much money you need, kind of to get through this year and to get into full production?
Well, we don't need money. So, okay, so the cash balances between cash and securities that we own, we have a balance of close to 5 million. Now, we don't, and this is very important, we don't have a burn rate for operations. We generate positive cash flow. But would we look at doing flow through for the exploration only? The answer is yes. But again, we don't need to raise money to get the mill to get to the full production of the current permit. Now, we may if we were to expand the mill to triple the capacity, then we may look at raising additional capital, but the need would be very small. And depending on how the cash flow is or how quickly we get it, we may not need to raise any money. But, I get asked this question a lot. People are like, what's your burn rate? And it's pretty difficult to have a burn rate when you're generating positive cash flow.
Right. Okay. I'll put out a final call for questions to the audience here. I think we've gotten through most of them. Peter, if you have any final thoughts to leave with investors, it'll maybe give them a minute to come up with any last questions. But if we don't get any more in, we'll sign off.
Yeah, I would just say the following. I mean, look, we're a company that very few companies are able to. I mean, we're in this bull market for precious metals, and there's a stat that 1.8% of listed Canadian mining companies have any form of cash flow, and we're in that 1.8%. And so, if you were to look at our share price historically over the past 5 years, what you'll see is you won't see this like massive jump up. You'll see this steady 20-25% a year increase. So it's a stable stock and pretty stable. We will continue. And now, though, the difference is that cash flow will like kind of shoot up like a hockey stick over the next 12 months. And the exploration side, we provide exploration upside as much as any exploration company because we've got two great projects. And so, in one sentence, I would say we provide investors exploration upside, huge exploration upside, and downside stability in that you're not going to see us raising money to keep the lights on.
Perfect. We have one final question come here. And just wondering, what is the all-in sustaining cost? And how you look at cost?
I can't answer that question. Like, what is an all-in? I don't understand the question because I just mentioned that we're generating positive cash flow.
Yeah, I think it's just wondering more about how the cost structure is with the agreements.
Well, those are under NDA, but I can't. I think the way to answer that is, follow the company and then look at what our operating profit is, because every agreement we have, they're similar, but I'm not here to disclose what those agreements are. But it's a pretty generic type of agreement. So you can look at historic writing that we have on how the agreements are structured, and you'll get that.
Right. Okay. And then we have a question just wondering about outlook going forward. Do you plan to make more acquisitions down the road?
Yeah, that's Pedro, right? So great question, Pedro. I would say the following is that the key, I was an M&A banker, so I certainly know how to structure them, M&A, acquisitions. And I think the key point here is it's a little bit like real estate where, there's a lot of houses on the market right now, and but they're still overpriced because, it takes a while for the market on the real estate side to come down. And I think that over the next 12 months, there's two key parts. We don't want to be paying for our acquisitions with our shares. We believe that there's a lot of upside in our equity. So there's no point in utilizing our precious equity to do acquisitions when you've got a group that has sold you an asset but is looking for liquidity. So the type of acquisition that we would be quite interested in would be cash flow focused, earn-in focused, rather than doing a larger acquisition where shares are swapped.
Perfect. Okay. I think that's all the questions that we'd have for today. So we'll wrap things up there. I would like to thank Peter from Nicola Mining for taking the time to host the webinar today with Red Cloud Securities, and thank you to everybody on the line for sharing all this.